Hello, this is Joe Pryor, the virtual real estate team in Oklahoma, where we do Oklahoma City and Tulsa real estate investors. We work nationwide with people, and that is our specialty. That's all that we do. What's a critical factor, however, anywhere you buy in the United States are interest rates. Now, I've talked about this last week, the week before. I always do this. And right now, let's just kind of say where things are. Right now, there's two, I think, really important folks that you can believe. One's a person, one's an industry in a way. First of all, Jerome Powell. So they just had the Fed meeting last week. They held rates steady. That's what 95% of everybody said that they were going to do. About 5% thought rates might go up, but they held steady, and the indicators are that rates may not go down for a while. In other words, inflation is still sticky. And then also they're kind of holding off to find out about what happens with immigration, what happens with tariffs, what happens with food prices, energy prices, things that they're unsure of with a new administration. And so the 10-year Treasury, the bond market, besides Jerome Powell, is the best indicator of where we are. Now, another reason why we're not going to see rates go down is because of the economy. The economy, we had 15 years now without a recession. Normally it's every 7 years. And we are much higher than what economists believe the growth of the United States economy was going to be. They were predicting 1.5% to 2%. We're at 2.5% to 3%. We're leading the industrialized world in terms of growth. And when you have growth, you're going to have inflation. So that is one of the factors that the bond market is looking at. They're also looking at, basic things like, will we have to replace migrant workers with, American workers, which would cause, salaries to go up, which is something that they're very particular about in terms of tracking. So right now, rates are about 6.25. Talked about that in a previous video. It's going to vary a little bit. We don't see anything for investors that's going to change that much. Fortunately, we're in Oklahoma, and what that means is we can start in new construction below $200,000. In fact, I have a fabulous house at $204,000, 1,420 square feet, 3-bed, 2-bath, 2-car. And so having that affordability factor in a growth market, and population is still in the top 10 percentage growth, is going to give you good yields, because this is what's very difficult in the United States right now. Now, if we had 5% interest rates right now, it covers a world of sins, no matter what the price might be. A lot of places that are $400,000, $450,000 for investment property, could cover you with a low interest rate. But that is not the case of what we're dealing with right now. Now, Jerome Powell has indicated that the Federal Open Market Committee may look as late as June in order to lower rates. Now, we know that there's a lot of pressure to lower rates, but I don't believe that's going to happen. The Fed is independent, and the Fed doesn't want inflation to flare up. And we know that that is still above the target market that they have set. So if you're an investor and you're waiting for rates to go down, you're going to be waiting a long time. In the meantime, prices are going to be going up on housing, as it has for the last decade, and it's going to make it very, very harder for you to find the right thing. So now's the time, perfect time to buy. Great prices in Oklahoma City and Tulsa. Rates are steady.